Alright, so now let me take you through the professional stock trading course curriculum that we'll be going through in the next couple of weeks and even months to come. So the professional stock trading course is divided into two levels, level 1 and level 2. Level 1 is really about the fundamentals, the basics of professional trading. You'll also be learning one of my most powerful swing trading techniques known as the bounce strategy. In level 2, we focus on advanced swing trading techniques, including counter trend trading, as well as intraday scalping techniques, where you make profits within a matter of minutes a day. So let's begin with level 1. So in level 1, there'll be altogether 8 lessons. So each lesson is divided into parts, and each part could last anywhere from 20 minutes to 40 minutes. So it could be about an hour or 2 hours, or even 3 hours per lesson. So the lesson begins with lesson 1, which is the introduction to professional trading, what we're going through right now, as well as what's the entire course curriculum all about, how do you prepare for it. Lesson 2, we'll be going into really the secret of achieving consistent trading profits. And this is all about understanding probability theory, all about understanding statistical expectancy. How do you basically trade like a casino and develop a trading system or identify a trading system with a positive expectancy in the markets? And I'll be showing you a range of trading systems that you know that if you continually trade these systems, you will always end up with profits at the end of the week or the month. In lesson 3, you'll be learning about how to get an edge in the markets. And the way we get an edge is through technical analysis. So you'll be learning about how do you master technical analysis, level 1. You'll be learning about what we call Dow theory, and really the principles underlying what drives technical analysis. You'll be learning about a very important topic, how do you identify trends? The trend is your friend. So how do you identify the short term, the medium term, and the long term trends in the market? How do you identify support and resistance levels accurately to understand imbalance between demand and supply and demand zones in the market to know where price is likely to reverse or continue its direction. You also learn about how to master moving averages. How do you use the different kinds of moving averages for different time frames? Using moving averages to determine the trend, overbought and oversold conditions, and how do you use it in order to identify new trend setups. Lesson 4, we're going to part 2 of technical analysis. We're learning all about the different indicators you can use to fine-tune your entry. We'll be learning about trend following indicators and oscillators that are used to identify overbought, oversold conditions, strong trend momentums. One of the most important parts of that lesson would be learning price action, which is learning how to read candlestick patterns to tell us the sentiment on that day. Is it getting bullish or bearish? Is it likely to reverse or continue? And even more important, how to anticipate trend changes with divergence. Not only will I teach you how to identify a change in trend, but how to anticipate a change in trend even before it happens, by looking for divergence patterns between price trends and indicator trends. Next, we're learning about how do you analyze the market and the sector. Okay, 75% of a stock's movement comes from the sector in which it's in and the overall market. How do you know which sectors are in momentum, which sectors are in rotation? Because when you identify a sector that's in rotation, money is flowing into that sector, a rising tide lifts all boats. High chance that stock's going to move up. You can buy the right stock with the great setup in the wrong sector, you're going to lose money. So how do you identify the right sectors? Lesson 5 is all about position sizing. How do you calculate how many shares to buy, how many shares to sell? Right? How do you manage your money, manage your risk? And you'll be learning about how to automate your trading business with order management techniques. All right, so we place our orders in before the market opens for swing trading techniques. When the market opens, you don't have to be there. Right? The broker will execute your orders based on your intended entry and exit signal. So your entire business is automated. You just have to spend less than 2 hours or even less than an hour a day to really get a full-time income from trading. And next, you'll be learning about how to leverage using margin and CFDs. So you can take on, for example, a $20,000 position with only $2,000. So that frees up your cash, it magnifies your returns even further. In lesson 6, we put it all together, the fundamentals together, technical analysis, position sizing, support resistance, where you're going to learn my most powerful swing trading system known as the bounce system. And this is swing trading system 1. It's a trend following system. So you're going to learn about the 2-candle and single candle reversal patterns. How do you know when a price is going to bounce off a trend line or moving average? By identifying those price action signals. You're learning specific entry and exit rules for the bounce strategy, both on a long setup and a short setup. How do you identify uptrend wave patterns and uptrend down wave patterns? How do you manage your trade once it's in? How do you know when to sell? How do you add more shares? And very importantly, you'll be learning how to screen for specific trade setups every day using a stock screener with written scripts that I'll be giving to you. And how do you identify high momentum stocks? Again, there are many people who look at chart patterns, indicators, candlesticks. They buy according to the patterns and the stock doesn't move up. Why? It goes down instead. Well, like I said, one reason is because you bought a good stock in the wrong sector, in the wrong market. So you have to look at a sector and market analysis. But at the same time, you can have the best chart patterns, but if it's on a low momentum stock, the stock's not going to move. Your stock has got to have high momentum. So how do you identify momentum? You'll be learning all about that by looking at relative strength, looking at the share float, the share volume. So all these things are really important in identifying what to buy, and when to sell. So what's really cool is you're getting all these scripts that I've written, right? So for every specific strategy you learn, you will get these scripts that will help you to identify and to screen these specific trade setups every day. Because there are thousands of stocks in the market, 7,000 stocks. So on any single day, which are the stocks that are following those specific patterns? The price action patterns, the indicator patterns, that you know the price of the stock's going to move up or move down. So these screening scripts are going to help you to screen these setups in literally minutes a day. So in the program, you'll be given all these scripts, you can download it and you can upload it into your screener and it will screen for you within a matter of minutes. Next, trading systems performance. I can assure you that every trading system you will learn in this program has been proven to have a high statistical positive expectancy in the markets. And what that means is this: not every trade will be a winner. But I can assure you that if you keep trading the system, you have more winners than losers. And an average winner is going to be more than the average loser. And that gives you a statistical edge in the market, a positive expectancy. So over a large sample of trades, you will always be profitable. So this is an example of the trading records that I have of my systems. And over here you can see two systems, the impulse pullback system, and this is the strategy, and the bounce system. So in level 1 of the course, you'll be learning the bounce system. And in level 2, you'll be learning the impulse pullback system and a whole lot of other counter trend trading systems, plus the intraday trading system. So this was one of my latest trade logs from April of 2017. And you can see typically in a month, you have got about 20 trades or more. Okay, these are the tickers. These are the positions. Some of them are long and some are short. And this is the specific strategy, all right? Impulse pullback, bounce, so on and so forth. And that's the result. So 2.5 basically means 2.5 R. So what is an R? An R is your risk per trade. So for example, if you are risking 1% of your capital on a trade, 1 R is 1%. So when you have a losing trade, you lose minus 1 R, which means you lose 1% of your capital. That's what happens when you have a losing trade like so, right? When you have a winning trade, you get, for example, 2.5 R of a win. So that means you get a return of 2.5% return on your capital. All right, so we measure our performance in terms of R. Now, traders who are more experienced and more confident, they may risk 2% of their capital on each trade. So if you risk 2% of your capital and you have a loss, that's right, you lose 2%. But when you have a win, you win 2.5R, which means you win 5% return on your capital. See how this works, right? So you can see that over a series of trades, you're going to have winning trades, break-even trades, losing trades. What's important is if you keep trading the system over a large number of trades, you have a lot more winners than losers. So for example, on this particular month, you can see for the bounce strategy, they were altogether 21, or rather 16 trades that were done, and there was a total of 21 hour of profits. Okay, so the expected profit for this month was 1.3R. So what does this mean? So if you take 21R, 21 divided by 16, that's 1.31, which means on average, when you have a win, you win 2.5R. When you lose 1R. But on average, each trade you place will make you 1.31R. Right? For example, in this month, you can see there were 9 winning trades, 4 losing trades, 69% win rate. So let me give you an example. If you have got, if for example, you take 20 trades a month, and you have a win rate of, now I know it says 69% win rate for this one, but let's be really conservative. Let's just take a win rate of 50%, okay? So with a 50% win rate, you're winning 10 trades, 10 winners, and you are losing 10 trades, 10 losers, right? So each time when you lose, say 1% or 1R. So your loss is 10% of your capital on your losing trades. Okay? Now when you win, you're winning at least 2R or 2.5 in this case, but let's just take 2 for easy calculation, right? So each time you win, you're winning 2% return of your capital. So your total return from your wins is 20%. So 20% from the wins minus 10% from the loss, your net profit after wins and losses is 10% return a month. Okay? So if you can get just 10% return a month, in a year times 12 is over 120% return a year. You're doubling your capital every single year. In fact, it is more than doubling because of the compounding effect. And again, I'm being really conservative here because you should in essence get more than a 50% win rate, and you should sometimes aim for more than 1:2 risk to return ratio. So that's how powerful these trading systems are. And again, in level 1, you're learning the bounce system, the first trading system that I'll be teaching you, right? Now, lesson 7 is one of the most important lessons. It's on psychology of winning traders. Okay, and I can tell you that psychology makes up more than 60% of your success. You know, there could be 10 traders and you can teach them all the same trading systems, give them the same charting software, using the same broker, but they produce very different results. Why? Because they have different psychology. And psychology affects your emotions, your discipline, your self-motivation, your ability to execute trades without discrepancy, execute trades without deviation. And only when you can execute trades with a focused, disciplined frame of mind will you get the highest return from the trading system. So you'll be learning in this lesson how winning traders think differently from losing traders. How to manage and overcome negative emotions that will happen in trading. Things like fear, greed, uncertainty, frustration, self-doubt. How do you overcome all those things? How do you manage temporary drawdowns? Remember that no matter how good a trader you are, you can't have wins all the time. It's impossible. A win is like a sale in a business. A loss is like a cost of goods sold. So you need sales minus cost gives you net profit. So as you trade, and for example, if you start with $1,000 and you grew $1,000 to say $1,000 to say $20,000, guess what? Your capital will not increase in a straight line. It is not linear. You know, it will go through ups and downs. All right, you'll be going through ups and downs this way, like that. So there'll be winning trades, losing trades, winning trades, losing trades. So what we call these are drawdowns, right? When your capital goes down in losing trades. So how do you manage those drawdowns so that it doesn't affect your psychology. And how do you program yourself with NLP, neuro-linguistic programming, to become a winning trader? Okay. Lesson 8, how do you develop a trading plan? A business always needs a business plan. If you view trading as a business, you need a trading plan. So a trading plan tells you exactly when to buy and when to sell. You've got to follow your plan to the T. You learn how to develop a daily trading routine that takes just less than 1 to 2 hours a day. How do you manage a trading journal to track your trades, your progress, so you improve each and every day? And how do you use the right stockbroker to give you the best commissions and the best service? And so level 1 will give you everything you need to start making money right away once you begin to execute and practice these strategies. And with that, let's move on to level 2 of the course. Once you have completed the professional stock trading course level 1, you can proceed on to level 2. And level 2 is where I will reveal my most powerful advanced strategies to take money from the markets every single day, every single week, every single month. So in level 2, there are altogether 5 lessons. And within these 5 lessons, you're going to be learning 3 more swing trading strategies and an intraday scalping strategy, as well as advanced technical analysis mastering tools. So in lesson 1, you're going to learn stock swing trading strategy 2, known as the impulse pullback system. So in this system, you're going to learn how to identify the beginning of a short-term trend and how do you enter right when amateurs are stopped out and you enter to catch the next wave up. So you're going to be learning impulse pullback price action patterns, specific entry and exit rules for long and short setups, how do you filter for the highest quality trades, how do you screen for, again, impulse pullback strategies using a screener and the written advanced scripts, trade management, exit strategies. In lesson 2 of level 2 course, you'll be learning a counter trend trading strategy, which means you're going to be buying at the bottom of the downtrend and selling at the top of the uptrend, using what is known as the Bollinger Mean Reversion strategy. So this is a counter trend system that buys once again at the bottom and sells at the top. You will learn how to combine the power of price action, Bollinger Bands, as well as divergence patterns to give you a lethal combination in the markets. You learn specific entry, exit, position sizing rules for the Bollinger Mean Reversion, both long setups and short setups. Once again, how do you screen for these trades every day? How do you manage your trade? And when do you exit these trades? So let me show you a few examples of what these trades look like. This is the impulse pullback system. It makes use of a bullish or bearish indicator. In this case, we've got a bullish indicator from the moving average crossover and the MACD system. So the moment you have got that crossover, that signal, it signals the start of a new uptrend. That's when amateurs rush in to buy. So they will buy and push the price all the way up. So we do not want to jump in with the amateurs, because amateurs always get killed, right? So the amateurs, as they buy over here, where would they place their stop loss? That's right, they'll place it at the low of the day. At the low of the day where the uptrend was signaled. Okay? And what sometimes happens is that there are institutional players, market makers at times, that will, in a way, manipulate the markets to capture people's stop loss. So they will push the price down through a series of pullback patterns. This is a pullback, that's a pullback. So they'll push the price down temporarily, forcing those who are long on the trade, who have bought the stock, who have placed their stop loss here, it will trigger their stop loss and force them to sell their stock. So they're selling at a worse price, they're selling at a very low price. And the professional traders will then pick up their shares at a low price and push the price all the way up and make a huge profit on that. So you do not want to enter with the amateurs when an uptrend is signaled. You want to wait for a pullback to capture stop losses, and then you enter the trade over here to capture the continuation of the impulse pattern. So that's why it's known as an impulse pullback continuation pattern. Here's a short example of that same setup. So in this case, you have a moving average crossover once again. and a MACD crossover signaling the start of a new downtrend. So once again, many amateurs, they look for crossovers and they say, okay, it's crossing over, it's a downtrend, they will sell the stock, they will short it, right? So it creates what we call a downtrend swing low pattern, right? That's the swing low. So many amateurs will start selling here, pushing the price down, and they'll place a stop loss at the high of that day. All right, and again, guess what happens, right? The price doesn't go down as fast as they anticipate, because sometimes market makers, big players would manipulate the price, push it up into a pullback. In this case, the pullback is going up, hits the stop loss, stops them out, so they are forced to buy back at a very high price. So once the professionals are able to sell to these people who buy at a high price, they will then push the price down and capture huge profits. So again, you do not want to sell with the amateurs over here. You want to sell only when their stop losses have been taken out. So this is one of the trade secrets where professional traders are able to make money from the market consistently by capturing the stop losses by amateurs. And you'll be learning this system in the impulse pullback system. The next system you'll be learning is the Bollinger Mean Reversion. So this is a system where we will buy right at the bottom of a downtrend, the moment it is oversold, and capture a quick price profit as it moves up to its moving average. So in this case, you can see the price is trending down on a downtrend, and right at this point, it's at the bottom of the downtrend. Right? So we look at specific price action patterns. We look at divergence between indicators and price. We look at Bollinger Bands. We do a quick buy right over here and capture a quick swing in the profits and exit over here before the price comes down again. So these swing trades typically last for a few days, usually less than a week, and you're out of the trade. So this is what we call a counter trend trade. In lesson 3, you'll be learning another swing trading system known as the capitulation system. This again is a technique where you're going to learn when a stock is selling off. How do you buy right at the bottom of the sell-off? You wait for market participants to capitulate. Now think about it. Every stock that's on a downtrend that's crashing will eventually have to bottom, right? Now when does a stock bottom? A stock bottoms when there are no more sellers left. Because if there are no more sellers left, it can't go lower, right? So when are there no more sellers left? When the last few people holding the stock have given up and have sold the stock. And we call that capitulation. To capitulate means to surrender, to give up. And that's exactly when we are going to buy, when everyone else gives up on that stock. Okay? So again, it's a counter trend strategy that buys right at the bottom of a downtrend when everyone gives up, capitulates. It's a proven high positive profit expectancy system like every other system. You learn specific entry, exit, and position sizing rules. And again, you'll be given all these scripts to automatically screen for these trades every day. In lesson 4 of level 2 course, you'll be learning Mastering Technical Analysis Part 3. You'll be learning about how to anticipate when a trend will continue through, again, divergence patterns Part 2. You learn about how to incorporate Fibonacci levels, retracement and expansion to increase your probability. And one of the most powerful techniques used by professional traders is trading with the power of confluence. Confluence means you're waiting for all technical signals to come together at the same time. See, there's some people who look at candlestick patterns. Some people look at indicators. Some people look at moving averages. Some people look at support and resistance. Some people look at trend lines, right? So different players look at different things. Now, what happens when all these things happen at the same time to give you that same signal? That's what we call confluence. And that leads to the highest probability trades and wins as a professional trader. Here's a quick example of a confluence point. So you can see the price going up, hitting a resistance, coming down, resistance, coming down, resistance, coming down, breaking above resistance. So previous resistance becomes support, right? This is something that you will learn as we go through the course. So don't worry if you can't catch everything right now. It's just an introduction, right? Now price goes up again and comes down and retraces and forms a bullish pin bar. A bullish pin bar is a candlestick pattern where people know with high probability the price is going to go up when they see a bullish pin bar. So that's one point of confluence. Second point of confluence, notice that this candlestick is finding support at the 50 moving average, because the moving average acts as a support level, as you can see. Second point of confluence. Third point, this price over here is known as the Fibonacci 61.8% retracement level, which is a very powerful level that Fibonacci traders look at. Next, notice that this point is also the support level of this previous resistance. That's a third point of confluence. Fourth point, support, support, support. It's also bouncing off a trend line. So you've got 4 points of confluence. And these are the kind of trades that will make you a lot of money as you begin to take them in sequence. So finally, in lesson 5 of the stock trading course level 2, you'll be learning the most powerful strategy I use to generate profits daily. And it's known as the GUN system. GUN stands for Gap Up, News, Scalp. We're going to be looking at stocks that are driven by news, right? We call that stocks in play. I'll teach you exactly how do you enter the stock the moment the market opens and exit within a few minutes. In fact, this average trade lasts for 3 to 5 minutes. You're in and out in 3 to 5 minutes. So just like a gunslinger, you bang, 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 take the profits and you run every single day, okay? So what we've learned so far in level 1 and level 2 of the course prior to this is swing trading. So again, swing trading is one where we look at daily candles, all right? And we don't have to be there when the market opens. We place our orders before the market opens. When the market opens, the orders execute. We only check it the next day. So the great thing about swing trading is that you don't have to look at the market when it opens. But it takes a few days to close the trade. It's known as a swing trade. It takes a few days. Now, the GUN strategy is an intraday trading system. What that means is that you have to look at the market when it's open. But I only trade the first half an hour to 1 hour of the market open every day. So that's all you need, a half an hour to 1 hour. And the great thing about the GUN system is that we're going to enter and exit within 3 to 5 minutes. So you take your profits really fast. So for this strategy, you have to use intraday charts with live data. And I'll teach you which brokers you can use that provide this for free. Okay? How do you build a daily watch list of stocks that are in play, where everyone is watching the stocks, they're rushing in to buy, the stocks flying up. See, every single day, there are stocks that fly up, right? 10, 20, 30%. I'll teach you how to identify these stocks and buy right at the market open and exit in 3 to 5 minutes. You take your profits. So here's an example of a stock known as TGI. And you can see these are using 1 minute candles. So each candle lasts for a minute. And the shaded portion represents the pre-market, before the market opens. I'll teach you how to read the pre-market data, pre-market charts. And the moment the market opens, when you see the chart in white, we'll buy exactly at this point, the first candle. By the second candle, it has hit our target price. And again, mind you, each candle lasts for 1 minute. So in 2 minutes, we have taken profits and we're out of the trade. So you learn specific entry and exit rules for this scalping strategy. And you also learn how to avoid the pattern day trader rule, which says that if you buy and sell on the same day, you have to have a certain minimum in your account. But there are ways to circumvent this ruling, and I'll learn exactly how to do that. So that concludes the curriculum for level 2 of the professional stock trading course. I look forward to seeing you in the next lesson.